Alrighty, welcome traders. It is Tuesday, January 16th, 2024. Yeah, I'm dressed like Nanook of the North here. It's just outside here and it's freezing, snowy, and took the dog for a walk. So I'm still thawing out here, but the portfolio is on fire. So we're going to talk about that. Let's take a quick look at the markets and we'll jump into some of the ideas that we're looking at for trades coming up. Let's take a look. The markets were down today overall, 1785 on SPX. So SPY down 0.37%. Nothing big, nothing great here as we take a quick look at the charts. One thing I do want to point out is on the weekly, we are starting to roll over for the third week in a row on, let me get my picture off because I know sometimes that gets in the way for you guys. You don't need to see me anyway. So let's get that off. But you've been rolling over for now the third week in a row. RSI is starting to head lower. So we've got some divergence in RSI. Even if we're hitting this newer high here, we did that on a lower weekly RSI. So a little bit of divergence there. And same thing over here. When we were starting to hit highs yesterday, intraday, and then last week on the 11th, and I'm sorry, the 11th and 12th of last year, but last week, when we were hitting those new highs, the RSI was not hitting the same highs as it hit back here. So RSI, geez, tough day, I'm still frozen. RSI is diverging lower as the markets were getting back to new highs, new recent highs. Even though MACD had been running up, we did have a little bit of a pullback today. Overall, I think that gives us a little bit of a divergence and a little bit of a pause here to think, is the market starting to get a little top heavy? We've got the VIX Expiration coming up tomorrow on Wednesday, and then OPEX on Friday. So some big things happening this week. Could get interesting. We'll see what happens. But we did take advantage of the pullback a bit today. So we pulled back right to the 9 EMA here. We're still above the 9, which is still good, and that's still above the 21. So right now, and which is above the 50, which is above the 200. So overall, we're still in an uptrend, and we're going to treat it as such, even though, maybe we're hitting a double top. Maybe we're just going to pull back and make the next run higher. Who knows? But RSI is saying you're running out of steam here a bit, and it's been dictating that on the weekly. If we look at the Qs, kind of a similar story here. I know there's a lot of stuff on these charts, so we'll try to make them clean and easy. But we have been rolling over on MACD. We are seeing things drop here on the RSI as well on the weekly. And then when we're looking at the daily charts here, MACD has been gaining as well as RSI. And techs, did have a decent day today. They were only down, 0.01%. So a pretty good down day, or a pretty good nothing day, I should say, not a down day or an up day, just a nothing day. But you got the 9 moving average exponential running higher over the 21, over the 50, over the 20. So everything here looks in pretty good shape, at least for now, to continue moving higher or at least sideways. And then on the IWM, this little big breakout that we had, we sold off hard for 4 straight weeks, and we're off and running to the downside again here this week. So overall, we have MACD rolling over, RSI heading lower on the weekly. You've got pretty much of a similar type of thing here where MACD and RSI are heading lower, and you've got the 9 exponential. We lost the 9 a while ago. And now the 9 is going to cross below the 21, and we've lost the 21. So now the only hope is the 50. So we're continuing to just take out moving averages to the downside on IWM, pulling us back into the middle of this range, which if it gets closer to the 21 here, I think then potentially looking at some strangles or something like that might be a good opportunity. So we'll keep an eye on that. We look at the number of stocks above their 50-day moving average that continues to roll over and fall. It's a pretty bearish sign for the market, dropping steadily on the weekly and on the daily. How far down we come, I don't know. But once it gets started, it gets going pretty well. And most of the time, that rollover hits at least the 200-day moving average. So we'll see what happens. But that, again, not a great sign for the market. And then the put call ratio will launch into our longer one here as we pull up the 10-day moving average chart. Bear with me on this. This continues to climb. So as this climbs, the market should weaken as well. So again, another potentially bearish signal as the put call ratio, at least the 10-day moving average on it, continues to head north, which is an overall bearish sign. So did we double top? We'll see. But again, another bearish signal. So bearish signals everywhere. If we take a look at the VIX, it hopped up decently today, up to 1384. MACD, RSI moving higher, and it's been starting to creep up on the weekly slowly here. So really not anything super perceptible, but just a little bit of MACD and RSI running higher. Are we going to see VIX making a run up to 16 to 20 something? Yeah, maybe. Let's see. With all of these bearish signals, I think it's something to watch out for. Let's keep going on the bearish signals. Today we had the dollar has been in a pretty good downtrend dating all the way back, really to October, November of last year, forming this triangle pattern, getting really, really tight and squeezing in here. And then boom, today the dollar popped higher, breaking through that on pretty good MACD RSI move. That also bearish for the market. So getting the dollar to pop up. Something else to keep an eye on here too is now you got the 10-year Treasury. That's also popping up. And I've been warning about, I think, bond rates overdone to the downside. I'm not saying they're going to snap back to 5% here, but we have gotten back to 4% now today from about a 3.8% previously. So we're starting to see rates start to tick higher. I don't know if it's going to last or not. I mean, you're still in some, still in an overall downtrend. However, you've broken now above the 20, you've broken above the 9, bullish, okay, and you've stayed above that. You've broken now above the 21, bullish. You've hit the 200 and maybe slightly above that, bullish. MACD and RSI moving higher. So overall, pretty bullish on bond yields, at least moving sideways. I'm not saying they're going to rocket higher, but we could just trade sideways to up for a little bit of time, and that's going to put pressure on bonds. Let's take a look at the futures with the dollar moving sharply higher today. We saw just FX, just the Forex names just getting smoked today. So 6A down pretty substantially on the session. The British, which is the Aussie dollar, the British pound breaking the uptrend, big down day there. Canadian dollar continues its big slide here. All of these breaking below their 21-day and their 50-day moving averages. Well, not the British pound, but Canadian dollar. And if we also look at the euro, breaking below, it broke the 9 back here, which was the first bullish trend. So we lost the 9. Now we've lost the 21. And we're trying to lose the 50, and we're back to the uptrend line on the euro. So dollar continues to strengthen. FX names continue to weaken. If they weaken substantially, I will be looking to get some 112 trades on there. So it's something to put in our pocket for potential trades. If we look at oil, it was off as well today. Dollar doesn't help that, but oil, look how tight this range is getting. So you got another triangle forming here that we really can't get out of and break out to the upside. And we do have the bearish signal here. MACD and RSI pretty flat to, not doing anything, but oil did move down on the day. And, we just can't seem to break the 21, and we're struggling with the 9 here. If we can't get above those, those are also below the 50 or below the 200. So this is still in a bearish mode. But I think I like oil overall. I think we'll give it a little bit of room here, but I think that's the next 112 trade that's possible. I think Aussie dollar could use a little bit more seasoning to the downside before we move in. So I want to take a look at that, how that's behaving. Gold today gave back the gains from last Friday, and it's just right back to where it was. MACD, RSI have been falling. You did lose the 21 and the 9 EMAs today. We're holding the 50, but you're precarious here on the daily charts with a PSAR bearish signal. So gold showing some definite weakness, and on the weekly here, 3 straight down weeks now for the MACD and the RSI. All right, so that's going to tell us that potentially gold, if we can't hold this 50 here, gold's got another leg down potentially. We'll be looking at the 200-day right around 2000 and or a little bit lower, 1977, which is also where the 3 ATR is. We got to keep an eye on that. And now copper's been doing fantastic for us. This has been a trade that we have been in and out of strangles early. I mean, we've been able to get 30% in 10 days or something, as opposed to getting our 50% in maybe 30-ish to 45 days. We're getting 30% in like 10 days. We've closed 2 of those already. So we closed another one today, and we just put a new trade on. With copper getting a little bit of a bounce today, it's still in, it broke the uptrend. It's really in a sideways range here. So this whole thing is in a pretty tight range. I don't know where I would draw this, but let's bring this line over here on the weekly and see what it looks like. All right, so you're in this tight range that you're bouncing between. It's been great. All the way back to May of last year, copper has been in a great range, perfect for strangles. Even though you have the ATR bands continuing to move in a little bit squeeze-ish here, taking a look at the daily, you got RSI, and MACD both selling off for weeks as this thing has dropped here. And we've lost the 9, we've lost the 21, we've lost the 50, and we've lost the 200. Okay, so copper pretty bearish overall, but I like the strangle opportunity here sitting right around these moving averages, especially on the weekly. So we popped another trade on today, and you know what? It's up 8% in just a couple hours already. So really loving copper. All right, and let's touch base on bonds. This is where I think you need to be paying attention. Bonds is where you need to focus. We talked about rates heading up, which is bearish for the bonds themselves. So let's take a look at bond futures. We have a downtrend. We tried to peak above that. We had recently on this strong uptrend move. I find a little bit of support in here, which we tapped on today around the 120 level. We lost the 8 or the 9 moving average, the 21, and we've lost the 200-day. The 50-day moving average is all that's left here. I'm not saying bonds are crashing, rates are going back up necessarily, but if you look at the weekly chart here, 3 straight down weeks on MACD, RSI is heading lower, so definitely bearish on the weekly. If we lose the 21 here and the 9 in the next couple of days, I think that's definitely bearish. We're about to, I think, flip a bearish PSAR reversal signal on bonds. Okay, what does all that mean? That means I think you got to be careful. If you guys got long your TMFs or whatever that you're in, or your TLTs, I think you really have to look at where you are. You're taking probably a little bit of a beating on TMF, especially, what is that down off of these highs? All right, TMF has dropped from 67 to 56. All right, so this thing's down 12, 13% already in just two weeks or so. So if you got in late on the move, you're breaking even, and you're now in a bearish trend. We've lost all of the moving averages that we have here. We're down to a 3 ATR. Maybe there's some bottoming potentially happen, but look at where we are on the weekly. This thing is nowhere near giving us an idea that we could be in a bottoming type of an action. So I think you have to really be careful where you are right now on these, and don't get too carried away In fact, I'm going to put one more piece here in. I'm going to put the 50 line in. So let me go ahead and grab that thing. We'll make it the 50. Normally, I will change this to purple. We'll leave it at 1. And we'll put it in. You know what? I also don't want the price. Okay. All right. And I'm going to save that grid. So just to make sure that I didn't make any changes to the grid, but I did make changes to this. So I want to keep that line in there. So you're breaking the 50 on the weekly. So I don't like anything I see on bonds right now. That looks a little bearish to me. So how bonds go can portend how the market may react in here. So we'll keep an eye on bonds. Let's move this thing up to here. So there's our current recent high price levels that we're at. But looking at TMF, that's not looking too healthy for me. So I am not ultra bullish, and I have not been. I thought this was an overdone bear market-ish rally on bonds. Now, if we hold this and move higher, we're okay. For now, do we hold the 50? Can we hold this support level? I think if we break either one of these, break the 120 level, it could be some more pain in bonds. And I think that's what you got to keep an eye on. All right, really quick sectors for the day. Only 2 sectors to the upside, and those are semiconductors and oops. Get this back to the way it was. All right, maybe not. I will fuss with it later. Right, here we go. So semiconductors, they were pretty much the lone sector up today that was keeping tech stocks moving. So here's the tech stocks doing okay in here. Now you can notice here on XLK, we're back near these highs. So I think you have to also pay attention to what's going on at these highs in here, and it looks pretty much the same as everything else. But MACD and RSI doing pretty well on tech stocks. You're above the major moving averages. I think tech looks decent in here. You're double topping, but tech stocks are still in charge, even though I think the SPY is weak. And looking at the bottom, we're still seeing weakness in oil and gas having a poor day, and then energy having a poor day, and then right behind it, biotech, and then the gold miners not having some good days out there. All right, Apple not having a good day either. So Apple pulling back. I was watching this 50 fib level. We've been bouncing off of it, bouncing all around it. Today, we gapped down, but did hold above it. And we gapped down, tapped on the 200-day moving average, and moved higher. This is still in a bullish or a bearish trend, I should say. Does not look especially warm and fuzzy here. So if you take a nice little downtrend line, that's what we're looking at here on Apple. Not holding up great, but MACD is trying to recover a bit. So are we getting to the bottom of it? Maybe. Microsoft is performing well, back up to new highs intraday today here. Amazon is just off its highs, nothing major there. Meta just off of its highs. Google just off of its highs, having a decent day today, just hanging in there. NVIDIA just pushing its way higher. NVIDIA very overbought daily, overbought on the weekly here. So, but still plugging along, and it can stay overbought for a period of time. And then Tesla, I think this is interesting in here. So I think Tesla in this wedge pattern, you're down at the bottom of the wedge pattern. However, you did dip below the 3 ATR. Doesn't mean we can't stay below it, because back here when we got below it, we just continued to ride it down. It's a little flatter now than it was here. But if we stay low and this 3 ATR starts to get 45 degrees or more to the downside like it was here, you can ride that all the way down. It's starting to turn over, okay? Any bump here, I think, might be an oversold opportunity here. If you want to play something a little risky with oversold on RSI, you could probably put a put credit spread in here, or if you want to play just a low risk, high reward, you could do a butterfly trade to the downside. All right, let's get into our accounts and take a look at how we're doing. So I know that's what most of you want to see anyway. So let's just jump into the account today. We did see our delta climb. So as the market was moving down on the majority of the session, that's going to push our delta up. So 470 delta, it's still 0.12%. This is below our 0.2% target. So we're still pretty delta neutral. We're in good shape if the market goes up. We're in good shape if the market goes down. We're not overexposed. Oops. Now, theta up to 1,064 today. We did get rid of a trade and put a brand new strangle on. So we did make that adjustment. But theta, as volatility is starting to heat up a bit. So you see the VIX up to a whopping 1384. But with the VIX up 4.5% today, our theta jumped up a little bit today. So we're at 0.26, so moving nicely. Net lick finished up today. So even though the market was down, we were up. We closed today 407, 347. Not a new all-time high. The all-time high right now remains at 408, 252. So we're just $1,000 off of that. So it could happen at any point in time to hit a new all-time high. It seemed like this one after another, we were ripping all-time highs. BP climbed a bit today with a new trade going on. We still have Bill here. So overall, our BP use is at 54% without Bill being factored in. That's pretty close to 50, even though we put a new trade on today. In fact, we put 2 trades on today, and 2 of them, and they took up pretty significant buying power each. So just because we put those 2 trades on, jacked our theta up, okay? But our buying power is still a pretty manageable position here, and I think we could take some things off potentially this week. So I'm looking and watching for things to potentially come off. And then we did make $688 in realized profits on the day today. That came from closing this HG strangle, $688. It was a 30% return in just 7 days, 7.9% return on the capital that we used for that trade. So a really great return. You've got to love strangles. They add the juice to the 112s. They really complement what we're doing, and they help take us to the promised land that we're looking at for our trade. So $688 up puts us now up around $10,113 for the month. So we're up 10 grand already, 2.6% up on realized, and 2.9%, almost 3% up on the net lick for the month. We'll take a look at how that's broken down here on the chart. We do have a $130 loss on a long-term 112. Essentially what that is one of our strategies is to buy the short puts of the PDS back, and that's what that was. I'm probably going to do it again tomorrow. So we'll probably add another small loss on the long-term 112s. And it's mostly coming from buying back some of the PDS pieces. All right, we have gold strangles up over $2,600 for the month. Other future strangles up over $1,100 on the month. So totally right now on strangles, we're up almost $4,000 in strangles for the month. So don't tell me strangles aren't worth it. They're absolutely worth it. ES 112 trades were up $895. Oil 112 trades were up over $4,000. Other 112s on futures that aren't part of these core 4, they're up $1,680. So we're up $6,700 on 112 trades, and we haven't even closed a long-term 112 on the month yet. And those are our big gainers. Typically, the FB 112, we're down here only because we've closed some put debit spreads, and obviously those are always going to be losses when you close the put debit spread, or you let the put debit spreads expire because you put those on for a debit. That's where those losses are coming from. and the gains on the naked puts were already realized last month. So there's nothing to offset these losses yet. So I'm totally fine with that. Doesn't mean anything for the strategy. We're still doing great there. And we had a couple 0 DTE trades this month so far. Didn't have time to really trade those today. Maybe we'll take a look at where the market is tomorrow so we can get some 0 DTE trades back on. We've been doing really, really well on them. And a spec trade up 1,900. So overall, that's our 10,113. The whole goal for the month is 11,866. That's a 3% gain. We're only 1,700 bucks away from that, and we still have half the month to go. And we're 14-0 on trades this month. So we've got 14 winners, no losses, with 100% win rate on all of our trades. So 14-0 on the month. And just a quick peek at the strategy builder, see where we're looking. This is how I've allocated my trades. We have 60% of my allowable buying powers in a long-term 112s. I'm using 15% for ES 112s. Standard 112s, I'm doing 10% on oil 112s. I've got some future strangles, 10%, spec trades at 5%. So I've figured out exactly what my buying power is on per trade, what my average profit is when I put these on. I know the average days in trades, so I know exactly how many of these I can put on each month. Okay, so this little strategy builder gives me exactly what I need. We've been using this for a while now, but I'm just giving you a sense of what we're looking at here. So based upon this, and I'm not factoring in losses in here. So just kind of a way to figure out how many trades I can put on, and then what my P&L should be. So if we can hit these numbers, okay, we should end up with a pretty great year. We'll see how it goes, and then we'll see if we have to make any adjustments to our allocations. But right now, that's how we're allocating trades here. And when we look at our open trades, pretty much along the lines of that. So I've got long-term 112s. I've got a full book of those on. I've got 5 strangle trades on. I've got a good handful of standard 112 trades on. And then I've got some ratio spreads, some BA 112s, and a hedge. I will be making some additional moves here. So their ratio spreads, they're included in our spec trades right now, but I'll probably be breaking those out. We continue to put them on. And they're doing fantastic. All right, so there's where we are, having a great year so far. We're up, doing really, really well. I think the big thing that I want to emphasize here when we're looking at things is don't be afraid, okay, to put a little risk on, okay, if you want to make the portfolio gains you have, but also make sure you're hedged appropriately for the trades that you have on, which I think we are. And I think if we get another trade on tomorrow, I think that'll be pretty beneficial to create another hedge. So we've got multiple long put hedges on. I think we're in good shape. The other thing is make sure you've got a plan and you figured out your strategy by plan. Saw a lot of bearish stuff in the market today. So make sure you guys have planned appropriately, not saying that we need a black swan hedge, but I want you to make sure that if we get into a downturn, 3, 5, 10% over the next 4 to 6 weeks, that you're prepared to take advantage of that. Downtrends are our friend. Okay, so you've heard the trend is your friend. The downtrend is your friend when you're trading the 112 trades, the bear traps. Okay, the 112 long-term bear trap, the standard 112 bear traps at 60 days. Either way, the downtrend is my friend. Okay, it's where we make the most money. We'll see how it plays out. We'll manage these trades according to our plans. All right, you guys have a great rest of your evening. I'm going to try to stay warm and move through the rest of the evening here. So you guys have a great day. We'll see you tomorrow. We've got some pretty cool stuff. I think you're going to like video I'm going to share with you tomorrow that I'm going to do with Candy Wrecker. We're going to do some market profile, show you how we actually apply that to figure out what 112 trades we want to do. So I think we'll share some of that with you guys as well. All right, take care, everybody. Bye-bye.